Hey everyone, it is me again, your friendly neighborhood financial crash test dummy. Today, I want to talk about something really important, something I wish someone had told me when I was in my early 20s, stumbling around with my hard-earned cash and big dreams. I am going to share some of my biggest investment screw-ups, the kind that make you cringe, but also the kind that taught me invaluable lessons. My goal is simple. I want you to avoid the painful detours I took. When I was in my early 20s, I was just like many of you. I had a decent job, some savings, and a burning desire to make that money grow fast. The internet was full of success stories, people turning small amounts into fortunes overnight. It was intoxicating, and I, naive as I was, believed I could be one of them. I saw all these flashy ads, heard whispers of hot stocks and crypto that were guaranteed to moon, and my FOMO, that fear of missing out, went through the roof. I did not have a clear understanding of risk, diversification, or even basic market cycles. All I saw was the potential for quick, easy money, and that, my friends, was my first big mistake. I jumped into short-term trading with zero experience. I remember poring over online forums, getting tips from anonymous experts who promised insider information I would buy based on a gut feeling, or because some influencer posted about it without doing any real research. I was chasing every trend, convinced that if I just got in early enough, I would strike it rich. Of course, that is not how it works. I would buy high, often at the peak of a rally, only to watch my investments plummet. Then panicking, I would sell low, locking in those losses. It was a vicious cycle of excitement, hope, fear, and ultimately, regret. Each time I lost money, I would tell myself it was a one-off, that the next trade would be different, that I would learn from my mistakes. But without a proper strategy or emotional control, I was doomed to repeat them. My bank account slowly but surely began to shrink, and with it, my confidence. One of the biggest pitfalls I fell into was believing in scams. Oh, the scams. They come in so many forms, but they all share a common thread, the promise of incredibly high returns with little to no risk. I encountered a few of these, from multi-level marketing schemes that disguise themselves as investment opportunities to dubious online platforms promising daily profits that were simply too good to be true. I remember one particular opportunity where I was convinced to invest in a supposedly revolutionary tech startup. The presentation was slick, the numbers looked amazing, and the people involved seemed legitimate. They even had testimonials. I put in a significant portion of my savings, imagining myself celebrating my early retirement. Of course, the startup vanished, along with my money, leaving me with a bitter taste and a huge hole in my finances. That experience was a real wake-up call. It taught me a harsh lesson about due diligence and the importance of skepticism, especially when confronted with promises of instant wealth. If it sounds too good to be true, it almost certainly is. Another major error was my lack of risk management. I would go all in on a single stock or a single cryptocurrency, convinced it was the next big thing I had heard about diversification, but I dismissed it as something for boring investors. I wanted excitement, I wanted massive gains, and I was willing to risk it all for that. This mindset led me to allocate a huge chunk of my portfolio to highly volatile assets, sometimes even using leverage, which amplified both potential gains and, more often than not, my actual losses. There were days when I would check my portfolio and see huge swings, sometimes up, sometimes down, but the downs always seemed to hit harder and last longer. The emotional toll of watching my money disappear was immense. I would feel sick to my stomach, lose sleep, and constantly worry. It was not just about the money, it was about the dreams and the future I was losing. I learned the hard way that understanding your risk tolerance and diversifying your investments is not boring. It is smart. It is about protecting your financial future, not just trying to hit a lottery ticket. My emotions, oh my emotions. They were the biggest enemy of all. I would get caught up in the hype, buy when everyone else was buying, and sell when everyone else was selling. This is often called emotional trading, and it is a surefire way to lose money. When the market was soaring, I would feel invincible, like a genius investor. When it crashed, I would panic, convinced the world was ending, and make rash decisions. I did not have a clear investment plan, no entry or exit strategy, just a roller coaster of feelings driving my financial choices. The constant stress and anxiety were draining. I realized that successful investing requires a calm, rational approach, not a reactive one. It is about sticking to a plan, even when your emotions are screaming at you to do otherwise. This was a hard lesson to learn, and it cost me a lot of money, but it was a crucial turning point. After all these painful experiences, after losing a significant portion of my savings, I hit rock bottom. I was frustrated, angry, and felt like a complete failure. But that low point was also where I found clarity. I realized that my approach to investing was fundamentally flawed. I was chasing fantasies, not building a future. I decided to change. I stopped looking for quick riches and started focusing on solid financial education. I read books, watched educational videos, listened to podcasts from reputable financial advisors, and slowly, painstakingly started to learn the real rules of money. I shifted my mindset from speculation to long-term wealth building, from chasing trends to understanding fundamentals. My personal journey from reckless speculator to cautious investor has been transformative. I am not a financial guru. I am just a guy who messed up a lot and learned from it. Now, I prioritize steady saving, low-risk investments, and building a strong financial foundation. I no longer obsess over daily market fluctuations or fall for hot tips. Instead, I focus on what I can control: my spending habits, my savings rate, and my investment strategy. I have embraced a philosophy of slow and steady wins the race. It is not as exciting as chasing overnight millions, but it is far more reliable and far less stressful. So what are my hard-won insights for those of you in your 20s? Just starting your financial journey, here is the bottom line, the fundamental truths I wish I had known. First, invest in yourself, always. This is the absolute best return on investment you will ever get. Think of yourself as a character in a video game, and every skill you learn, every course you take, every book you read is an upgrade. It is about building your human capital, your ability to earn, to innovate, to adapt. This includes your education, whether formal or self-taught, acquiring high-income skills like coding, digital marketing, sales, or even just mastering a craft. It also extends to your health physically and mentally. A gym membership, good food, adequate sleep. These are not expenses. They are investments that pay dividends in energy, focus, and longevity. When you are healthy and skilled, you are your most valuable asset, and that is something no market crash can take away from you. The confidence, the problem-solving abilities, the sheer grit you develop from investing in yourself will spill over into every aspect of your life, including your finances. I have seen the direct impact of this in my own life. When I focused on improving myself, my income grew, my opportunities expanded, and my financial decisions became clearer. Second, own a high-income skill. Really own it. Master it. Do not just dabble. In today's economy, jobs can be fleeting, but a truly valuable skill is recession-proof. I mean the kind of skill that people will pay good money for, that makes you indispensable. Think about sales. Every business needs revenue, and skilled salespeople are always in demand. Copywriting. The art of words that sell, it is timeless. Coding, digital marketing, artificial intelligence. These are just a few examples. The point is, hobbies are great, but skills pay the bills, and then some master one skill deeply, become the go-to person for it. And then if you want, stack another skill on top. This creates a powerful combination that provides financial security and opens up countless opportunities. I spent years dabbling in various things, never truly mastering anything, and it showed in my income. Once I focused on developing a marketable skill, everything changed. It gave me a sense of independence and control that I had never experienced before. Third, live below your means and invest every possible dollar you can. This is not about deprivation. It is about smart financial habits. I call it the 3 tiers of investment. Tier 1, as I said, is yourself. Max out your investment in your personal growth, your skills, your health. This has an infinite return. Tier 2 is your business. If you have one, this is where you can see exponential growth, 100 or 1,000% returns. Reinvesting in your business, whether it is new inventory, hiring talent, or running paid ads, allows you to control your growth trajectory. This is an area where I have seen incredible progress, turning small initial investments into substantial gains, because I was in control. Tier 3 is liquid and non-liquid assets, like the stock market or real estate, but with a cautious, researched approach this time. But here is the crucial part. These traditional investments come after you have invested in yourself and your business. Many people put all their eggs in the stock market basket, ignoring the incredible returns available from their own growth and ventures. I made that mistake, focusing on external investments before truly building my internal value. Prioritize yourself first, then your ventures, then other assets. Fourth, learn game and social skills. This might sound surprising coming from a finance guy, but it is incredibly relevant. Strong communication skills, the ability to read a room, to connect with people, to be articulate and witty. These are superpowers in life and in business. They lead to more opportunities, better networks, and ultimately more financial success. I used to be an introverted mess, afraid to speak up, awkward in social situations. It limited me in so many ways, but I forced myself to learn, to observe, to practice. I learned how to tell a story, how to understand body language, how to engage in meaningful conversations. And I am telling you, this transfers everywhere. It makes you better at sales, at negotiations, at leadership. It makes you more confident in general. People want to work with and be around interesting, spoken individuals. This is not about manipulation. It is about genuine connection and effective communication. It is about becoming an energy magnet, someone people are naturally drawn to. This skill, I promise you, will open more doors than any financial investment ever could. Fifth, take calculated risks and do it as soon as possible. Your 20s are the perfect time for this because the downside is often the lowest. You probably do not have a mortgage, children, or major financial responsibilities. You have time to recover if you fail. This is the highest upside window of your life. Do not play it safe. Playing it safe, in my opinion, is the riskiest thing you can do. I spent too much time playing it safe, regretting not starting certain projects or investments sooner. Start that business, move to that new city, take that challenging job, invest in that new venture. The regret from not trying, from wondering what if, will hurt far more than any failure from trying. And if you have been following the previous points, you will have the energy, the skills, and the financial cushion to take these risks more intelligently. Sixth, your mission, and you come first. Everyone and everything else comes second. This might sound selfish, even a little harsh, but hear me out. Society often tells us to be selfless, to always put others first. And while selflessness has its place, especially once you have established yourself, in your foundational years, you need to be intensely focused on your own growth and mission. I have seen too many men, myself included at times, get distracted, lose focus, and become resentful by their 30s because they did not prioritize their own development. You cannot effectively help others if you yourself are struggling. You cannot lead a family. You cannot feed. Financial abundance and personal strength create a ripple effect that benefits everyone around you. By focusing intensely on building your financial stability and personal capabilities for 5 to 10 years, you create a foundation that allows you to be truly generous and supportive in the long run. I had to learn to say no to distractions, to guard my time fiercely, and to focus on what truly moved me forward. It was not always popular, but it was absolutely necessary for my long-term well-being and success. Finally, be interesting. This is the capstone to everything else. Do not be one of those boring, predictable dudes who just scrolls all day and has nothing to talk about. Collect experiences, not just money. Travel, learn a new language, pick up an instrument, dive into history, learn martial arts, cook new cuisines. The more diverse your interests and experiences, the more depth you have as a person. And this, I am telling you, is incredibly attractive in every sense of the word. Women are starving for interesting men. Employers seek out intelligent, well-rounded individuals. And in business, being naturally witty and having a wide range of knowledge makes you a conversational chameleon, able to connect with anyone, anywhere. I made the mistake of being too singularly focused on just making money, and I realized how dull I was becoming. Now, I actively seek out new experiences, new hobbies, and new knowledge.